Good morning, everyone, and welcome to the European Cross-Up webinar. And I was going to use the first part of the show. Actually, probably a good portion of the first part of the show will be devoted about the profile. I was making some references about the profile yesterday, and I've talked about using the profile here. I'm sure some of y'all probably didn't already know what the profile is, but I was making some points yesterday because the market was, especially the NASDAQ, well, the last couple of days, I used it to kind of suggest what was going to happen with the euro, not necessarily as a predictive tool, but just to say, hey, look, we're reaching an area. I think it's going to be a good area where they're going to kind of probably run a little bit out of gas. And if there's much of a reach beyond where we are on the euro, I think that'll be just pretty much what it is going to be. And then we'll probably, end up coming back a little bit, only because of where I thought we were on the profile. So I thought I'd go in and spend this time to focus on how I use the profile. Profile's been around for a long time. I think since from the late 80s, I think it was, or 90s. It was invented, or however you want to call it, from Peter Stottlemyre. Actually, it's a big old book, or not a book, a PDF you can get through the CME, or I don't know if it's even through the CME anymore, but you just Google it and you can download it. It's extensive, and I've tried to read it before, but I deal better with just looking at something visually. So that's why I'm going to explain it and spend this first part of the show, or a good deal. I guess the show is going to be long, so it won't be a cut of it, but I want to go in and focus on using the profile and explain it and how I go in and use it. Bear with me one moment. And I'll just mention where we are right now. We did go in and come back a little bit here from the in the NASDAQ. We dropped down, come off of those highs, and same thing here with the S&P. And yesterday, the NASDAQ was trading really well with the support and resistance, how it was going with the profile. So I want to go in and bring up the profile specifically. Bear with me. Now these, and I'll expand this a little bit so you can see it more clearly. Don't pay attention I've actually written these out. It looked like it might have been the system that generated this, and I didn't. I'm only going and pull this out and kind of explain. See if I can. Bear with me. Let me see if I can't. Trying to make it more easier to see. Bear with me. Sorry about that. Maybe there's part of the problem there. Hold on. Okay, this one's not so perfect. I'm trying to make it would be easier to see, and probably because these ranges are wider, that might be the reason why. We try and find. We can go in and use, I guess, this one here. Trying to show these numbers. I'll try and explain from here, and then I'll see if I can't get into one of the profiles a little bit easier. It'll be easier to go and see. It'd be easier if I was take a look at it. Here's another profile from the euro. Let me see if this was. Yeah, that probably works a little easier this way. Okay. So the profile. Here's the range for the day. Here's the we've got the volume laid out, but here's the range. And let me go on, and this one is actually generally with the profile. It's going to be obviously you can have the profile from. You can have a profile generally the more popular where it's going to be over each 30-minute period. But you can have profiles going to be, a single day. It represents, just one single day or one single week. You can see the amount of volume or the price action that goes through. And I guess I'm trying to explain a little bit more clearly. I'm not doing a very good job of it. But when the profile first started or not, remember markets weren't electronic going 24 hours. So we just had the initial session, in the U.S. session. Now, of course, we got a European session. The U.S. session, let's say the bonds, they opened up at 8:20 Eastern, blah, blah, blah. Indexes, they opened up at, 9:30 Eastern on up to the close. So this is on a 30-minute. It's going to represent a full day right here. It's the same thing here that I'm showing here on the euro in the euro futures. Okay, and but this one is encompassing the entire move from electronic session, which when I look at the indices, I just try and look where most of the volume's taking place, or how it generally was used, which is going to be from 9:30 Eastern till 4 p.m. Eastern. And we have the entire range of the day. And the reason I was trying to make it smaller, you can see the general look of this profile right here. What I was trying to do is so you could see the individual layout. Okay, so if you look in here, here's the euro. This is almost like 24 hours where the market first opens up. And you have when the market opens up, here's the opening price. You can see right in red. And this little black line is what they call the initial balance area. So you can set it up the way you want. I have it set up in 2 periods. And this is going to reflect, each one is going to reflect 30 minutes. So if you look at number one, you see right here, it goes, and usually with the profile, they have it in letters. A lot of the programs that you use, depending on which software program, they'll have the profile. The one here in TD Ameritrade, for whatever reason, they have it set up with numbers as opposed to letters. And so if each number, you can see here, 1, 1, 1, 1, 1, that's the first 30 minutes marked off as a number. And then the next one is 2. So you can see it goes from, 2, how the market traded, right up to here was pretty quiet, then 3, and we go so forth and so forth going on. The initial balance area, which is I have it set up for the first 2 periods, which is 1 hour. This is going to be the range here. Now this is on the euro futures, but here is the initial balance area here on and you don't see the letters because we had a wider range over here, so it's more hard to define those. But you can see the initial balance here, which was the first 30 minutes, which is the first hour, where the market essentially traded on this given day. The market opened right up here at 27.61. It had dipped as low as 27.52, and then rallied up to 28.57. Well, as the market, you can see here, you got the different numbers. It looks like it's hard to understand. It's not that hard because I don't look at each individual per se, but you can see in the fifth 30-minute, you can see here 5, then all the way down here. You can see how it was trading during that period. And so when the profile was first used, they usually use it with the letters. So it'd be big A, then BBB, and then CCC, and then you can see the progression. But that's not what my key thing is. What I look for is, and I try and keep it simple, as I look for what's called, you can see here the point of control. Now, what you'll see, this kind of lays out almost like like a bell curve. Okay, so you can see here that the most amount of time spent here, you can see right here, you can see happens to be the volume also right here, is going to be this. I have it set up in a pink area where it's pinked out, and that's going to be what's going to be called the point of control. So with a lot of people that will go and trade, I wouldn't say a lot of people, but many don't. They say, you know what, moving averages and all this other stuff is a bunch of guff. What we want to look at is how much time is spent at different price intervals, because this is like an auction. As the price moves ahead and they bid the price up, and then you don't find enough value, you can see here. You can see the amount of volume that took place is within this gray area right here, which is called the value area, and it's basically a 30-70 area of the amount of time that was spent in here. So it shows that this is the greater value area of the markets trading during that day, and the most amount was right here at the point of control, where you saw the most amount of trading, i.e. the Euro futures, which, as I told you before, is trading at least right now like about a 15 or 16 pip premium, was done at 1974. So if you were to drop from where the cash was, you'd be like right here then at 1958 down here on this given day. The reason I had this one exploded so that you can see the layout as this market moves of course here. What some people do will look at this more closely, and you'll sometimes see, and I'll pull this out here, and I'm just trying to give a overall better understanding, and I'll explain how I end up using it here. Let's see here. Let's use an example here. Here's one particular day, but I want to look at something here. I will show you. Probably we can see what we've been actually doing recently, and I'll show you that. Look here. And once again, I'm just trying to so that we can get a better understanding. Here's a euro right now. This is the euro futures right now, and you can see here that you see we've got the first open here. Now that's on, and I have it set up because, as I said, with the indexes, and here's the NASDAQ. I can switch it over. Bear with me one moment. And once again, we're going to get into the more crux of it. I just want to lay out. Let's go and move in. We'll look at the S&P. Okay, there's the S&P right now. Bear with me. Oh, they're putting the tag there on the because it's going to work here now. So when we look at the S&P, now this is set up on what they call, as I was referencing to you, and I selected the 30 minute. Let me put it back to 30 minutes. I thought I was going to set up because of that. This is going to reflect, is going to be on the RTH, what they refer to as the regular trading hours, which of course everything's different now with the electronic session. But you can see here, and this is on the S&P, you can see on this particular date, the opening right here at 9:30 Eastern, the first 30 minutes, because of the initial balance, it's called the initial balance, it's going to be the first two periods. You can see here that we open up here, and remember, the first 30 minutes are going to be ones. So you can see in that first 30 minutes, 1, 1, 1, 1, 1, 1. Actually, it traded this whole first half hour. It traded right in here in this first initial balance here, and then you can see the twos. The twos came down in here. That's the second 30 minutes, okay? So this area, this is what encompassed here, that first 1 hour. The first 30 minutes, 1, 1, 1, 1. The next 30 minutes, 2, 2, 2, 2, 2, 2, 2. You see? And that was the initial balance area for the first 1 hour. You can see that the market traded from 41.29 on up to 41.42. And then in the next half hour, traded for the 41.42 down here to 41.36, and then also it made this run back up here to 3, and on up in here, and you can see on here the point of control for the entire day was in the upper band area. You can see here at 41.37. The most of volume was traded there. That's where you can see what essentially you can think of it as the most value, where the market spent the most time. And then looking at a percent and a half of standard deviation, this is the value area, which is going to be basically a 37 area here. So you see this big old value area. I'm just trying to go and point out, sounds like a lot of, I don't know, esoteric talk or whatever, but what I wanted to get to was, let me go on and move into the NASDAQ, and then I'll back this up a little bit and explain. Probably doesn't sound like a whole bunch of gobbledygook right now, but I'll try and explain. So let me go on and take a look here with the euro. Let me go on and get here with the NASDAQ right here. So I'll give you an example. This is the way I go on and look at it. There are other areas where you can see here where you'll get what they sometimes call to single prints, where you get a market that goes way up in here. And the reason it's single prints because you can see the wider the area is spent the most time. Sometimes you'll get a market that, take a look here, is where on the NASDAQ, where the market gets, you can see that the market went and pushed up real high or low with all these single prints. It pushes way above where the market was up. See a bunch of, and you can see the way I've marked it up myself. But you'll see where the market stretches up way high, where sometimes probably more definitive here. And right now with the Euro futures, the reason I don't use the regular session hours, which is the US hours, is because so much of the volume takes place, so we see some of the bigger moves develop initially in the European session. So what I did was I just set this up for the entire electronic session, which, as I told you, is going to be from 6 Eastern to 5, I think it's 5 Eastern. So it's going to encompass, because the problem with the RTH, it's not going to go in and show it's not going to go in and show the European or the electronic trading, and that's going to be important for me if I'm looking at the FX. So let me go back in here. Let's pull this up. Put it up here. So yesterday, I'm just using an example here. No wonder I was looking thinking, well, where the heck is the NASDAQ? So here, hang on, it's back in here. Oh, here we go. I apologize. Okay, there we go. Let me go on in. So what I do during the day, anyway, I kind of explain that from looking at it a little bit closer. Probably sounds like I said all kinds of nuts here. But you can see yesterday's range here. You can see the initial balance area. So now you're not seeing it as clearly where I had it here, because you're thinking, well, look, you can see it more clearly broken out. But it's almost like you can't see the forest for the trees, but it's explaining, showing it to you what the breakdown is. I'm not garnering anything from that. What I do is I kind of step away from it, and I look at it, and here's yesterday's composite in a 30 minute. This is yesterday's session. Here's the day before session. Here's the day before that. Here's the day before that. So you can see here, here's the first 2 periods, which is going to be the first hour, which is the initial balance area. You can see I have it in black. Here it is also in black. You can see the point of control right there. I have that in pink. And then, of course, the value area, which is going to be 30, 70, 1.5 standard deviations. So you can see where the balance area of the area. Let's pull this out. Might be easier to see. You can see here. Here was yesterday's zone. Here's the day before. Okay, so one of the things was when we opened up yesterday, you can see in the, and once again, this is a NASDAQ, it's RTH, so it's regular trading hours. We opened up at 8:30 Eastern, right there, which is going to be 13,982, and you can see. Remember, the initial balance area is going to be the first 2 periods. I'm looking at a 30 minute, so the first period, this initial balance area is going to be the first hour. This is how the market traded. We'll pull this out and see if you can see it a little bit closer. And not so much, because once again the range is so much wider, so we're not seeing all these letter breakdowns. But I'm not looking at it that closely. What I'm trying to do then is I look at it here, and throughout the day, this point of control is going to be moving up and down. This one isn't going to, because this session from the day before, it's already been established. Okay, so we have the point of control already there from that session. During the day, while the market's trading, this is going to be moving here, as this range and the whole thing could be moving, because the point of control is going to be what they're going to refer to as the developing point of control. So it's going to move up and down. At one point, it was up here to 39.50, and it started moving a little bit lower as the market broke lower. So let's go and pull this back now. As the market started breaking lower, when I used the profile before, but one of the things that I noticed when I was using it, I was thinking, as this market had broken down yesterday, initially, you see this point of control right here from 2 days ago. This was on the 12th. You can see that came in right there at 37.80. As this market broke down yesterday, and I was like, where am I going to go in and find support? Now, I was looking at different areas because I used the opening range, and actually on the breakdown, it actually came down and hit the opening range from the prior day. You can see that right there. You can see right here. Initially down here at that 38.60, and actually even stopped right before then. I'll kind of lay it out for you. Here it is on a 5 minute. That'd be hard to tell, but you can see it actually came down here to this 38.70 area, and then we saw a bounce all the way up. Well, on the way down, this is the areas it's still extended, but on the way down, this market broke. It stopped right there. I mean, I think it stopped about 2 ticks above the point of control, which you can remember. That's the most volume on that day, where you saw the most, what they call the most value, because you're looking at it from an auction standpoint. So where the people had the most people participating was right there at 37.80 from 2 days ago. Well, I'll be doggone, as this market's breaking down, quite often what will happen is, whether it's the euro or the indices, you can use it with bonds, you can use it with gold. I've showed y'all, and I'll try and go into more examples how I used it with gold. We talked about that a few days ago. Matter of fact, I had yesterday's support, or day before yesterday support at 1722. The low was 1723. Now, I didn't think that the market was going to bounce up and go bananas, which it did, and I think it was 2 days ago, I believe it was. But it did. I mean, it turned around and jumped up like crazy, but it stopped right there, $1 before. Once again, that's where the most value is at. So when the market breaks lower, these markets will just start targeting. It's just like they're driving to a number where they see, like, where's going to be the most value, and they push and test it. And so this market dropped down. You can see that it eventually dropped even lower. But initially on this move, this market stopped dead at 30. I think it was 13,783. This was at 13,780, and from there, the thing turned around and jumped up. Didn't go a whole lot, but it turned around and jumped up, weighted up to, I think it was like 13,906 or 13,910, something like that. I think it was 13,910 before we came back down. Of course, we went a little bit lower, but we came back and up in here. Eventually, we broke lower. So one of the things that once I started kind of using the profile as a tool, I kept noticing the NASDAQ, we would see these moves just like this, where the market would break down, and of course this was the prior days, but sometimes it would break down. I go, well, I'll be doggone if it didn't just go right to the point of control from 2 days ago or yesterday, and then the market just mysteriously bounced. Well, it's not that it mysteriously bounces, it's just that's where the most volume is at. So the market, as in yesterday, went right to this area. Of course, eventually broke a little bit lower. You can see it went down here to 13,771, but initially it didn't. It stopped right there, about 2 ticks or 3 ticks before, and turns around and jumps up. Now, throughout the day, when I was referencing these numbers, I was telling people, okay, the point of control now is at 13,950. It's still moving lower, and I said any moves that we got back up in here, you could basically fade these. And of course, now we're moving into the day we're at now, but you can see here that. And I was mentioning the value area, but as we started moving back up off of these lows, the developing point of control, because once again, now the session is over, because it's just the regular trading hours, the U.S. session right here. It's closed. But at the time, as I told you, the point of control was up in here at 13,950, and just coming lower and lower, more volume. It's, as I mentioned, a developing point of control. Once the session is closed, that's it. There's the point of control. But then as the market breaks away from that, as we come back up here, think of it as an auction, people are going to say, well, that's where, you know, this price is way too high. But as we come back up to this point of control, it's now going to be considered, think of it as a ceiling, like, well, this is the most, but people aren't going to want to spend any more than that. And the market is always pushing back and forth, trying to go and find value. Not explain it perfectly, but the way I use it and try to kind of tie this up before was that I look at each of the ranges, and the same way that some of us do also, we will use confluences. So we'll look at levels and we say, oh, okay, let me pull this back in here. Bear with me. This is on the euro, and I'll try and tie it all together. Oh wow! Look, it's here. It's come. The cable's coming up to 38.10. Remember, yesterday I had my resistance yesterday was with the cable was 37.90. But we did have a level here on the futures, and really the futures now are trading. I think it's almost pip per tick right now. The cable is trading at 37.85, and the futures are trading at 37.87. So there's only a 2 pip difference. But my point is that, you know, we might say, oh, look, I have resistance at 38.02. And at the same thing at 38.02, that happens to be the 50% retracement. And you might have a moving average. So you're trying to see if you know, there might be confluence. You go, yeah, that's perfect. I mean, if I have a pattern that I'm doing, an inverted head and shoulders or whatever, and it's going to project to 38.02, and that happens to be where I've got this, you know, this level right here. It's coming in perfectly at 38.02, and that also happens to be the 50%. So you got the confluence there. You go, okay, great. That at least from my, you know, I'm talking about you, I being any of us, that gives me a lot greater confidence that might be where that's the best place to lay off my longs, or if I'm interested in being short, that's a good area. You can see right here against this. I'm going to go and take a look at this. And I posted this chart, and I had 38.08, although my whatchamacall, my bias chart resistance was 37.09. But you can see these touches coming here. So this 38.08 looked pretty good. The market did ultimately kind of run out of gas right there. Out of gas there. Did kind of get above it. We paired back. The market already had a pretty good run. I don't know if the cable, I know the euro had the 50%, but anyway, we paired back a little bit. So I try to look for confluence. That's the same thing that I do with the profile. There's different ways to go and read the profiles, and you're going to see different things with, you know, poor highs and poor lows. And sometimes what I like also I'll look at is when we get a range where the market, there's only what I sometimes refer to as single prints, where the market gets, you can see right here that there's not really any trading right here. This is all single prints. It's like the hit stop. You see right here, you see down here, this run all the way down here. Now that was actually on the first, you can see that you may not be able to see it as clearly, but this is all one. So that was when the market really opened up. Sometimes you'll see a market hit stops, and all of a sudden there's not a whole lot of trading. The reason you're seeing these single prints is because the market just ran down there, hitting stops, and then you'll see the market come back. Well, if the market comes back to test that, usually it'll go right to where those single prints are, and you'll see the market turn. So my point being is, so what I try and do throughout the day, and you can see this isn't the system that marked these. I mark them myself. I go on and use an example right here. Let me come over here. And I'll mark here. So this is going to be, here's the initial balance area right here. And it also happens to be the range, the session high. So I'll go in and put this here, knowing that might be an area like that. I'll mark that off. You see right there? And then I'll put the little notations here that you can put them either where they don't show up, or you can put it on the left side or the right side. I'll put it on the left side. Let me just go on and, so when I look at it and I look at the range, so if we start to go and move higher today, I'll use an example. Right now, the NASDAQ just made a run up here to 13,885 right here. This is 13,895, okay? So when I look at the previous session right here, which is where we're on now, let me pull this up. Okay, and here's a perfect example right here. Okay, so remember, this is the regular trading session hours, right? Remember, the U.S. session, 9:30 Eastern to 4 p.m. Eastern. Okay, so look, you can see here that the NASDAQ It was down here, and we were rallying throughout the entire European session. Okay, look where this market ran out of gas. Okay, let's take a look at this. You see that right there? It's at 13,895. You see that? This is where the market ran out of gas, 13,895. And you look at here and you're like, well, I don't see anything specific. I mean, the resistance here came up here at 13,917. What are you talking about? Well, guess what? When you come over here, the point of control yesterday came in at 13,887. So you can see that the market, when it rallied back, it got just a little, it got actually to right here, 13,895, just a little bit above this point of control area here. And so that this move up here, that point of control basically worked like a magnet. You can see where it dragged the market up, and once we got up to here, which yesterday's point of control was 13,887. Look, the market pushed up at about, what, 8 more ticks, and now we've started slipping back. Now we're below the point of control, 13,874. We're at 13. We dropped as far as 13,867. So you can see here that from that area, we ended up dropping down 30 ticks. So you can see where it went to yesterday's point of control. The reason I'm saying that is because as this market started breaking down yesterday, I was thinking, and I mentioned in the chat room, boy, if it's going to break down, today's a good day, meaning yesterday is a good day, because I thought Wednesday, that will allow us to see some follow-through on Thursday, and maybe Friday, we'll find out what happens. Maybe we really see this market go off. As this market started selling off, I'm thinking, where can this market go to? And it kept falling down. I'm looking here, and I'm like, oh, look, here's the point of control. Maybe this is where this market's going to stop, and I'll be doggone if this move, it eventually worked a little bit lower, but this move stopped right there. This was at 13,781. I think I had it just saying 13,780, and I think the low was 13,785. And then we turned around and rallied off of that to 13,906. At the time, 13,906. Before we rotated around, came back low, we went back lower. But you can see that offered an area for them to go. So generally what I'll do then, when everything's kind of moving real fast, I'll go in and mark these off already and say, okay, the point of control, here's the initial balance area right here. You can see the black area, and I'll look at the value area, and I'll call it the value area high, the value area low. So when I'm looking for these levels for them to go in and go to, and then I'll look at the euro and see how I tied that into that, I'm marking this off. You can see as this market was breaking down, here's 13,839. You see this 13,839? This actually stopped the market on the way down earlier in the day. Let me see if I can pull this back here. As the session opened, I know it seems like we're all over the place, but 839. We had because this was the break, and we got, yes, when we broke here, I actually got long in here, and we saw this market rally up. But what I'll look for is the market breaks down. You see here this initial bounce area, as the market started selling off, I go, well, look, this is going to be an area of support. Well, the market did go in and stop there initially, and that's at 13,867. We kind of bounced from that area right on this initial bounce area low from the day before. We saw a bounce up here, and that's that bounce I'm talking about, because we saw the move lower when it went down here to 780. But on this initial break here, the previous days, look at that. That was not only was it the initial bounce area, which is the first hour, but it's also the session low right here. Well, when this market, and that's what I was referring to, this I had 13,867. You see here, I have this saying IBL, initial bounce low and range low. So I said, okay, well, that should go on and find some support there. And initially, as I was telling you, the market went down here, and we stopped, I think, almost right on the button, maybe just a little bit lower. And then the market did go on and rally back up. This is what I was talking about, to this 13,910 before it eventually went lower. Now, on this move down lower, you can see the market targets areas. So as the market started breaking lower, how far could we go? And then this is where I had this up here, the point of control. And you can see that point of control came in at 780. And you can see here where the market dipped. And actually, if the market wanted to break lower, it could have even got down here, push it even further. I'm looking at, okay, we've got the point of control. I'm looking for some confluence. It happens to be the point of control here is 13,870. And look at this. I call it like a double point of control. And the point of control from the day before was 13,769. You see what I'm saying? So I'm like, okay, I've got 2 points of control. So when the market comes down here, it's going to find the most participation that was on April the 9th, which is Friday, came in right there at 13,770. And on Monday, it came in right there at 13,780. So I'm thinking, as this market's selling off, I said we should see some value buying to step in here to provide some short coverage. And you can see the market ran out of gas, and then we started moving right back up. So it's basically like the market is moving up and down, up and down. And many people, I won't say everybody, many people will be actually somewhat dismissive of, oh, I don't care about moving averages. I don't care about this. I just look at where the market is seeking value. And when the market can't find it there, it's going to move lower. And where is the market? And the best way to explain, I guess, is to say, where is the market going to go to where it's going to find the next area of value? Because when the market fails up in here, remember the point of control yesterday was to start out the day at 13,950, and we start breaking lower. As we started breaking and taking out these levels, where is the market going to go to? Where is it going to look, to seek to find value? And as we push much lower, initially when we looked to find value yesterday, we found value at the prior day's session low, which happened to be the initial balance low. And you can see there's that 13,867 that I was referencing. We stopped there and the market rallied up to 13,9, I think it was 13,907. Because I was thinking, oh, if we can get up to 13,920, it didn't, because at the time that's where we had the point of control, the previous day's point of control, and the market rotated. But originally it found support here at the previous days. Remember, initial balance low. It was also the range low, and the market did bounce. So it found value. It looked for value. Where are we going to find value now? We failed up in here. We're pushing lower. The market's going lower and lower, and the market's saying, many people believe, it's anybody, I'm just saying is, I don't care about moving averages. All I care is where's the most value, where we can seek the most buyers to step in so that I can cover my shorts. Where's that going to be? So on this initial run, it was the previous day's low, which also happened to confluence. Remember, two confluences: the range low, I have RL, and the initial balance low. And we did find value right there. The market rallied up to 13,907. I was hoping to rally up to 13,920, which is the previous day's point of control. But you can see here once again, and I'd actually got long at that area too. Yesterday I traded both sides. So I didn't stick around for too long, but I'm saying I traded both sides. So the market came back up in here. I was hoping to get short at 13,920. It didn't. It ran out of gas at 13, I think it's 13,907 before it rotated lower. As the market breaks lower again and it's testing these lows, it breaks lower. Where are we going to go to? The market's still falling. Do I see anything? And as I'm looking here, I'm thinking, well, here's the range high on this day, okay, which there was a little bit of buying there at 13,840, but the market's still pressing lower because this is just happens to be where the market was traded at that time. Where's going to be but you can see that, you see how it's real thin here, unlike there's a lot of trading going on here. There's not that much value, so you can maybe cover some shorts here, but where are you going to find this market where they'll finally step in and support this, support this market? As this market breaks lower, then we find that support with 2 point of controls. Here's the first point of control here at 13,780, and the previous day's point of control right there at 13,769. I go, hey, you know what? That's a pretty good area. They're probably going to step in and want to defend that. If I'm short, or if I have been short, maybe I've been adding on here. I know I don't want to step in and add new shorts now because this is going to be an area of value added buying. So the way I do it, once again, I'll come here and then I'll go to the euro and hopefully I can tie it up a little bit better. Duplicate. Okay, so here, on the way down, look at here, and look at here, duplicate, and there. So as this market is breaking lower, you see here, the market's breaking lower. Okay, and I'll lay it out. So the market's breaking lower. I'm like, oh, wow, we're really starting to sell off. This thing, look like I want to push up higher. We're really starting to sell off. Where am I going to find value? Where's this market going to find some support? I'm looking here and I don't have any of these up here yet, sir, or I already laid them out. Oh, yesterday's session low. It's also has to be the initial balance low. And sure enough, remember I told you the market stopped down there in this area and the market rallied back up to 13,907. I was hoping to get short, as I told you, from 13,920. That was the previous day's point of control, but the market ran out of gas at 13,907, and because everything was already starting to turn bearish. And as the market broke lower, it went past this low after it already held it, and it held and rallied up 40 handles. And it turned around and starts running. It starts breaking lower. The market's like, hey, we're breaking lower. That was just a temporary stop. We're really starting to gain some steam. Oh no, they're starting to gain some steam. Should I add on to shorts? Oh no, I already piled on my shorts. Maybe I'm gonna step in and find where this market's gonna go to. Where is this market gonna go to? So I'm looking and I pulled this out. I'm looking, and of course maybe I only have this set up like here. And I'm like, where's this thing gonna go to? And I'm just looking in. I go, oh look, there's 2 points of control there. That's probably going to be a pretty good area. Now, you see as I scrunch it up, you can say, oh, yeah, I do see where it kind of ran out of gas right there. It even had, I wouldn't say perfectly single prints. These are more like single prints, which is barely, you can see there's no real trade. And you can see that they might have get some stops and ding, 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 ding. And then finally, so lots of times when the market breaks, it will go to these single prints. This isn't single prints because you can see the trading right in here. You see that? But the value area is going to be 70% of that whole session right in here. So as this market's breaking lower, I'm saying, well, here's the previous low right here. So the initial balance low, well, there was a little bit of hell. You can see a little bit of trading right there. But as this market's breaking lower and all heck's breaking out, where am I going to find support? I go, okay, look, there's a point of control here and point of control. The market's probably going to start to run out of gas, and it didn't run out of gas perfectly because look, but the market did spend some time here because you can see here, there's double lines here. So the market kind of steadied itself, and eventually it starts working higher. That's the way I look at it, and I'm looking at it not so much as, and I'll show you here. Here's the euro, as the actual this thing at the individual numbers playing out. What I do is I look at it from a more distant point, and I'm looking here at the actual lay of it stepping way ahead, just trying to see the forest instead of the trees. And I'm seeing the total range yesterday. Once again, this is RTH, regular trading hours, and I'm looking at the total range. And what I'm looking at, the key things I'm focusing on. Sometimes, if I told you, I'll have what I sometimes refer to as single prints. That where the market hits some stops on the upside or hits some stops on the downside. Sometimes that will work as a magnet for the market as we're breaking lower or we're breaking higher. So once again, as it started to break lower, I said, wow, where can I find where's this market going to go to? I said, oh, here, look, it's going to yesterday's session low. There should be some buying here, at least on the initial go round, and that happens to be the initial balance area, which is 13,867. I put this line right here, and I put it just in gray. So it can make it, when things are moving fast, I can see it developing more quickly. It stopped here, and as I told you, not to sound redundant, it then turned around and rallied up to about 13,907, if I remember correctly. I was hoping to get short at 13,920. It didn't get there, and the market starts rolling lower because we had the point of control here. The developing point of control right here at the time was at 13,930, because remember, it's developing as the day trades. When the day finally completed, the point of control where the most amount of volume traded place was at 13,887. And you can see here that as the market in Asia found some support, it started running. And what was 13,887? Right there. You see that? That's 13,887. We took it out by just a little bit to 13,895, and then we turned around and fell 30 handles. So that's what I'm saying. That's the way that I look at it. Now, when I tried to look at this, and give you an example, here's the euro. I'm like, well, that doesn't really help me there, because it's only showing the U.S. session, and the euro gets going sometimes bananas, right when we're opening up in the European session. So what I did was I changed the profile to show the euro to encompass the entire session from where it opens up electronically at 6 p.m. Eastern till it goes all the way to the Asia session, to the European session, onto the U.S. session. The way that I used it yet, okay, so what I've done, when I used it on the way up, as I was, let's take a look at the euro. This out of the way. And you can see we're punching up higher here in the S&Ps. So the way I used the euro, the way I was using the euro, we were punching higher. I like to look at it on a 2-hour chart because I don't like to go out 4 hours. There's some markets I will go out to 4 hours, like crude oil and gold, because you can't. Sometimes it looks like gobbledygook until you get to a much higher time frame. But the way that this market was moving, initially when we saw this market move, I said, wow, I saw the bottom of this range, and we had the top of this range. Remember that the euro right now is trading 1985, and the futures are trading at 1998, 1999. So it's trading at essentially a 15 pip premium right now at this moment. So as this market started working higher, I said, hey, it looks like we're going to make it to this 15%. The market was struggling. We finally got there, and we kind of steadied ourselves. And I was looking at these areas here. And I'm thinking, well, why did I think that the market was going to run out of gas in here? So now I'm going to look at the euro in the full session. When I say full session, it's not RTH, which is U.S. session, which in this case, the U.S. session would be from 8:20 Eastern, 8:20 Eastern till 3 p.m. Eastern. No, I try to do it now because the euro trades have a lot of trading going on in the European session. Then I just do the entire gamut from 6 p.m. Eastern, from early Asia through Europe, to all the way to the end of the U.S. And so what I did with them was the same way I did with the euro. You see here, I was marking these up. I'm looking at the point of control. Here's the initial balance area here, right there with the euro, and this is actually, bear with me. Hope I didn't turn it off by doing that. Hold on. No, I didn't. Here it is. Yeah, I did have it right down. Okay. So here it is, and you can see this. You can't see any much that with the U.S. session, that doesn't give us a whole lot. We're not seeing the real picture. So what I did was I pushed this out so that it would encompass the whole entire electronic session. And it's in at 30 minutes, so it's encompassing the whole thing. So one of the things that I was looking at when I was looking at the euro going on the way up, I was looking way back in here, trying to see here where I was seeing from these previous sessions. Where was I seeing volume from these points of control? And you can see here, you can see the profiles of each of these days. But what I'm looking for is I'm looking at the value area, and I wanted to show you all the smaller, minute breakdown, maybe not minute, but all the letters. I'm not looking at that. I'm looking at it as a total composite, and I'm looking at the composite. I'm looking at the value area here. And what I was doing is I'm looking here and I'm saying, where am I seeing the most? So you can see that back here, when it was trading, of course, we were much low before. We saw all these points of control coming in right here, 1953. But we're not trading. Right now, we're trading at the 6E is trading, which is the futures, is trading at 1999. And the, the cash is trading at 1985. Remember, it's a 15 pip premium. So it is what I look back in here and I said, well, look, you see right in here, this is where we had all this value. So there was a lot, this point of control. We did have a lot of pushes up in here with ranges, but a lot of these, if you look here, there wasn't a whole lot of trading going on here. Remember I talked about the 2010. Okay, so someone was asking me, oh, do you think we're going to go to 122 or whatever? And I'm thinking, no, because I'm thinking on the way up in here, and this is back from March. This is where I'm seeing all these. Remember we talked about getting as much confluence, and so I'm seeing these point of controls. You see here, here's a double point of control at 1952. Remember, and there's a 15 at the time, it's a 17 pip premium. That was where the market, the cash actually ran out of gas at around 1929, I think it was. I think even Amanda she took some of her long off at the time, and eventually she got long again or added more, whatever. So as this market started to move higher, I'm going back here. I'm saying, look, there's nothing here. It's all air until you get all the way up in here, like at 2058. And I go, I don't think the market's going to go that high. So when I look back in here, this is what kept telling me, thinking, hey, we're starting to run out of gas here. As we started coming into these, you see these composites where the point of controls are, they're all coming around 1958, 1955 or whatever. Here's another one. This was almost, look at this point of control. 1, 2, you see here, 3, all here in this 1954-ish. So that was at the time I was looking for a move up to around 19, maybe a max of 1932. I think I remember talking about. And on the cash, and we did dip back. So as this market moved higher, that's what I was looking at over the last couple of days. I'm thinking, well, look, here's a point of control at 1975. Let's take off 16 at the time. I think it was 16 pips. That puts you up to what, 1967. So here's the last one we have up in here. That's 1989, which would have put us right around 1975 on the cash. And then you can see really there's not that much trading as you get up in here. See how thin the profile is here? Look how thin. Now, it doesn't mean that the euro can't go any higher, but we're really up in thin air. Right now, you can see here's the actual price right here. 1998, remember, is trading at a 15 pip premium. So the cash right now is actually trading at 1985. So you can see here, this is those session highs. Look at this. I put on here, look on here, 310 through 317. Look at this. Here, you see right here, 2015. Now that's on the future, so that's going to give you basically 120 on the cash. Look at here. Here's the initial. Here's the range high on the. Look at this, the 10th. Pretty much close to the range high here on the 11th. And you can see here the little initial balance area here, and then you can see here on the 16th. Look at that, 2009. Remember, trading at 15 pip premium. Probably about a 1994 on the cash. Range high, and look up here, 2012. Take off 15 pips, that puts you about 1997. So you can see that yes, the market made it up there, but these were all ranges. This was basically thin air because you can see where was the most volume traded here on this day. It was trading much lower at 1998. Take off 15 pips, 1983. Look at this. It traded 1975. You see what I'm saying? So look, all the rest of these value area here, when I look at the point of control where it was the most volume, or even if you look at the value, the area here, which is, from 30 to 70% of here, the 30 on the low side, 70% up here. Look how thin it gets up here. Yes, there was a little bit of trading because you can see the profile come like this, like a little mini bell curve. And that comes in closer like around 120.02, which would be like about 1987. And same here. We had some decent trading around here, a little bit. It's up to the big margin, but the most was here, 20.05. Take off 15 pips, about 1990. So you can get up in here into the session high. We'll go back in here. Let's move this out of the way. That's what I'm thinking here when I come back in here. Hey, this is where all this volume was taking place here, right in here. And if you look yesterday, and I'll show you yesterday. Look at yesterday's on the open yesterday. The market went bananas on this open. If we come back in here, this is yesterday's open. Remember we talked about all that volume here? Man, the market went bananas on the open yesterday. And look at all that volume. Let me see here. We'll get back in here. Right there. You see here? We hit this flurry of volume right in here as we're opening up, and you can see all this volume hitting here. You see that? Look at all that volume that initially hit here when they first were breaking out here, and then they dipped back here. And this is right in the European Open. I think we're pushing a little bit too far, but my point being is, and let me go back to the 2-hour chart, is that where all this volume was hitting in the volume point of controls that I told you about, which were much lower. You see here, they're much lower. When we got to yesterday's European session, man, we just had, this is where all this volume was really had in the past had taken place. So we hit a lot of that volume on the get-go yesterday. So now we're pushing higher, but once again, just like I told you, can we go higher? Yes, but the way I looked at it, it's nosebleed territory, essentially. There is some trading here. You can see how it's a little bit wider here, just barely, but most of this is, and there is a little bit of volume in here, not much, but there is some. So we can hang around here if we get up in here, which is we're doing right now. I'll open this up right now, and you can see here. We got past, we finally made it to the 50%. We dipped back, we came back, we dipped back, we came back. We can still push up a little bit higher, but this is, I think, the extent of this move here, because look, after that, if we were to get beyond it, doesn't mean we can't, but the auction would say, hey, well, now we got to go to much higher prices to seek value. And that would come up here in this 2058 area where we see once again volume. So I'm thinking is, at least for the profile, the market is going to be, there's going to be, we can hang around here, and I said this yesterday, we can probably hang around here for a day or two up in this upper area. You can see where we had that right here, but it's thin air. We might see the market hang around. Maybe as it's already Thursday, if we do price check, we might even try and hang around here for the rest of the week. But I think eventually we're going to end up having to turn back down. So that's how I use the profile. I hope that kind of explains it. Actually, we spent a whole hour covering this. I'm going to just go on and post the bias chart. I'll go on and get that updated. But I wanted to share, it's probably not a perfect explanation or a great explanation, but I wanted to share how I use the profile. Some people were saying like, well, I don't even understand how what that thing even means. And that's why I did the first part trying to explain, well, let me try to put this up. This is how I use it. And like I said, if you look at it, it kind of looks like a bunch of gobbledygook mess. You can see here's the breakdown. We're looking at the euro. You can see here the euro. We're looking at today's session. When it opened up the electronic session, it opened up at 1994. Here's the initial balance area. Remember, it's 2 periods, the first two 30 minutes. So look at this, 1, 1, 1, 1, 1. Now look, 2, 2, 2, 2, 2, 2, 2. You see what I'm saying? So it gives that first initial balance area here. Sometimes the market will go back to that as a resistance or whatever. But here's the whole entire range from the electronic open to today's where we're at right now. So we opened up in the electronic session at essentially right here at 1994. You can see we rallied up as high as 1999, and this was this entire first hour. The next half hour is 2. Do you see that? And we came and we traded as low as 1994. As we moved into the third period, we traded down to here to 1993, and then you can see the market started moving higher. You see this threes here, and you can see that we spent some time here. The most amount of time you can see where the value right now, the developing point of control right now is just where we're is right here at 1989. So the developing point of control right now is essentially a 9 pips lower. So if the market goes and drops back. But once again, the way I use it is I look at it from looking from a step back and seeing if the market starts breaking lower, where can we go? Okay, here's yesterday's value-added area. And you can see initially the market broke a little bit lower. But if the market really starts to break lower, I'm looking at least initially, is yesterday's point of control, which was 1974. So if you look at the cash, think of it 15 pip difference at this point would be 1960. So if it breaks lower, if we start breaking lower, where can we go? I'm going to be looking first for some area to step in. Remember, this is the most amount of volume that was traded yesterday. The market spent the most time here yesterday trading at essentially 1960. Right there. That's where the market spent the most of the time. You can see this big old bell curve, and that's where the most, so if the market breaks lower, that's where people are going to look to step into cover. Doesn't mean that it's over. You're going to see probably a bounce back from that area, and if the market, they reassert and start selling off. Now, is there any confluence? Yeah, there is. Here's the point of control from yesterday, and guess what? That almost ties with the range session high of the prior day, which is 1971. Remember, take off 15 pips. So if we're looking at that, then we're looking at about 1956. So remember I told you, point of control on the cash yesterday is going to be around 1960, and we have 1956 here, which was the yesterday session high. Do I see anything else here besides that? No, I'm not seeing. But I think, like I said, if we break lower, we're looking at about 1960 as yesterday's point of control, which also confluences with the previous day session high, which would be 5 pips lower. So that's the way I use it. And when I looked at this, I said, wow, this is where all the points of control are coming up in here. And yesterday we came at 1975. We're really up in thin air. So that's what I'm saying. You're seeing the market struggle. It's still up here, but it's having a little bit of a tough time. Can we push a little bit higher? And this is the futures. And remember, 15 pip premium. So at 2013, that's going to relate to about 1998 in the cash. So once again, it can hang up in here, but there isn't a whole lot of volume. There's some volume. So I think that any stretch in here, if someone's long, they'd probably be looking to maybe exit. And then depending on what happens, maybe we'll have to go down. Doesn't mean that it stops it. The market profile is not a predictive tool, but it tells you where the market finds value. And if the market can't find value at a certain level, it's got to move to a higher level or to a lower level. And we look to find out where's the most volume or significant touches that we saw. And just like I told you, if we break lower, then be looking for a move, the market to step in and find value at yesterday's point of control, which futures is 1974. Let's think of it cash, 15 pip premium, which come in at 1960. Also, that confluences with the previous day, which was the 12th, its session high. And its session high came in at 1971. i.e. would be 1956. So I would look for value to step in and buyers to be attracted if we break lower to come down here to between 1956 to 1960. Doesn't mean it's the final low, but you'll start to see buyers start to step in and want to cover because they'll know that there's value there. So we've spent the whole entire hour covered on that. I hope that kind of helps explain it, but that's where we're at. And then I'll go and get the bias chart posted with the notes I had from last night's Asian session. And thanks for joining us here on the European Crossover webinar.